Joining me right now to weigh in on Wall Street as well as policy right now is Pennsylvania Senator Pat Toomey. He's also on the Senate Budget and Finance Committees. And Senator, it's good to have you on the program this morning. Thanks very much for joining us.
Good morning, Maria. Thanks for having me.
What's your take on what's behind this? Not to call you a market timer or anything like that,
right,
but this market is reflecting some real worries out there about the possibility of growth slowing down. Your take?
Well, it's hard to know how much is that, how much is a little air coming out of the asset bubble that the Fed created. Let's remember the stated goal, the stated objective of monetary policy for years was to pump up the value of assets, create a wealth effect, and hope that that would encourage economic growth. Well, at some point when you start to take out some of that accommodation, and we're still at basically a zero real interest rate on the overnight rate, so there's still some ways to go, in my view, to normalize. It shouldn't be shocking that maybe we give up a little value in these assets that have gone on such an amazing run.
Yeah, we should put this in perspective. We're still looking at a gain of 40% since the election in 2016.
Exactly.
But you mentioned the Federal Reserve, and
Right.
because you did, I want to bring this up and get your take on this. The president said the Fed has gone loco, that the Fed is crazy, that the Fed is behind this sell-off. Do you agree with that?
So I think we should have begun to normalize interest rates long ago. You can make a good case for the emergency measures the Fed took back during the Great Recession. That was 10 years ago, and we still have abnormally low interest rates and a massive balance sheet. So no, I think the Fed has been prudent belatedly, but I commend Chairman Powell for sticking to a transparent path to normalization. And, you know, we're in an environment where certainly a great deal of the equity value has been expansion of earnings, and the economic growth story is very real. So hopefully this isn't severe, but no, I do think we need to normalize interest rates.
Senator, let me ask you, I know stocks go up and stocks go down, and there has been a narrative out there that things would slow down because you're talking about 4% growth, but you're also looking at higher input costs as tariffs cut into some profits. Is this going to impact the Republicans in the midterm elections? Yes, all of these things are normal. We see this all the time, up and down markets, volatility. And yet we're 3 weeks away from probably one of the most consequential midterm elections we've ever seen. Is this going to impact the Republicans' chances?
So I think that the net effect of all of the data is that it's overwhelmingly positive. The average Pennsylvanian who goes to the polls in a few weeks realizes that the economy is very strong, unemployment is at a record low, the growth prospects are tremendous, consumer confidence is excellent, small business enthusiasm is off the charts, and yeah, it'd be nice if the equity markets were hitting even new highs. But a modest, even a reasonable sell-off, I think people will put that in the context of a very strong economy, and the economy is a net positive for Republicans going into Election Day.